So we want to welcome you to another episode of the Barita Brain Trust Bites. And we have a privilege right now because you're sitting right beside the top fund manager in Jamaica. That is true, right?
Well, you can call me that for today.
Listen, we have Ferris Jackson with us. He's the manager, portfolio manager of global equities at Barita. And he's been responsible for leading our top performing equity fund, not just in 2018, but up to 2019 so far. We're still number one. That's right?
That is correct.
And so really, you are going to get a chance to hear just his insights about how he sees the local equity market. Because Ferris, as you can imagine, our stock market has been doing pretty well.
Well, yes. I mean, it has been doing well since 2015. And so far this year, if you look at it up to October, it's up 30%.
Yeah.
Yeah, and it has been flattening out since August. But investors have been rebalancing their portfolios because you have a number of issues coming to market. For example, the JMB additional public offer. I mean, JMB buying at least a 20% stake in Sagicor Financial. So, I mean, that gives them that much earnings power after that transaction. So investors see the stock as attractive. So they would have pulled some funds to get into that additional public offer, right?
I mean, that's interesting because as we were talking about just in the past, Bloomberg has spoken about our stock market being the best stock market in the world for the past 2 years. And you're saying it has come down not because of any significant fundamental change in the economy?
Oh, no, you'll always have some rebalancing taking place from time to time. And of course, stock markets move in cycles. So, I mean, you won't see a continuous line moving straight up. So sometimes you'll see some dips.
Right.
But of course, investors should see that as an opportunity to buy into the market because they really want to buy the dip at times, especially when you're in a bull market. So that gives you the ability to generate a greater return.
Right.
Of course, you can get in by averaging your costs, you know, by buying small portions over time, you know. But I mean, you can always take advantage of the dip. So I did mention the JMB additional public offer. So that was one corporate action. We have you had a number of them as well. I mean, Proven sold some of their Access Financial Holdings shares to get into the JMB additional public offer. And you're hearing about Trans-American Highway. I mean, that is supposed to be pretty big.
That's right.
Of course, we don't have details in terms of the financials. So I really can't comment right now as to whether or not it's a buy, you know, or investors should leave it. But it's certainly generating a lot of interest among investors. So they're holding cash right now to get into that.
That's very important to mention first, because really what you're pointing out is that while the stock market has been going up and it's coming down, we shouldn't view this as, boy, this means things going bad, but this is more an opportunity. That's what you're really saying to people.
Definitely. I mean, stocks tend to outperform other forms of investments over the long term. And when you're buying shares, you have to think long term, 5 to 10 years, you know, because you're buying risky assets. And by risky, it means that the possibility exists that you might see a fall off in value of your principal. Right. So you have to give yourself time, use time to your advantage so that you can see your principal appreciate over time. And of course, I did mention before you buy the dip, also when your portfolio falls in value, you can always look at those stocks that have fallen off in value and evaluate whether or not you should either buy more or you can look at other stocks just to boost your overall portfolio.
Okay. No, man, that's very good. So even on that note then first, as we're thinking about 2020, what is the approach? What's your outlook that you have for the stock market? Because as I said, long term, thinking about the year and 2020 and beyond, how are you looking at the local stock market?
I mean, things are pretty good right now. I mean, before we had a crowding out effect with the government borrowing a lot of money. We have a high interest rate. So it didn't make sense for you to invest in risky assets when you could get significantly high returns on interest. And I mean, from a local standpoint, it's risk-free, I mean, government debt. So right now rates are low, and I expect them to continue to remain low right now. So it makes the equity market that much attractive. So the economy is doing well. Unemployment rate 7.8%, very low. I mean, we need to do some more in the area of productivity in terms of increasing output. But certainly, I think the foundation is ripe for the economy to do well. and by extension companies. So it means that you should see improved earnings going forward, and that will allow investors to buy into more attractive companies. We expect more companies to list on the market.
Right.
So we are JPS, we are Jamaica Mortgage Bank, so that more opportunities for investors to buy shares. And it seems as if each new offer attracts new investors to the market. So
that's true.
I mean, you have far more investors. We tell them that 30,000 new shareholders.
That's right.
And the strategic or select financial about 20,000 investors. So I mean, you have more persons buying into the market right now. They are feeling confident. So it's for us to, as investment advisors, to educate them about the market so that they can become seasoned investors, so that they can buy in ways so that the market moves in a sustainable manner. Because one of the things that will happen, investors will see prices falling, and as a result of that, they panic. So let us look at, say, QWI, for example. It came on the market at $1.35.
Right.
$1.25 if you own Jamaican Tea shares. The stock went down to about $1, right? $1, 1 cent, $1. So, I mean, you'd have seen that IPO, you'd have lost value. But the truth of the matter is that you should not panic.
Right.
You know, one of the things you should do when you sit down with your investment advisor is to get an idea as to how to structure your portfolio. So, a QWI probably wouldn't constitute more than 10% of your portfolio.
Right.
So you can always rebalance your portfolio and offset that kind of loss. So it's a small portion of your portfolio, or you can buy more.
Right.
You know, because they produce results and it was pretty decent. You know, so I mean, if they continue to produce good results, then certainly the stock will rise over time. And again, 5 to 10 year long term when it comes to stocks, it's a risky investment. And it's a perfect example where you invest in an IPO and you saw where your value would have fallen, but you should not panic, you know, because you use time to your advantage, and you also have a very good relationship with your investment advisor as well, because they're supposed to advise you. You know, so at Barita, we have a research team, and the research team provide meaningful information to the investment advisors, who in turn can provide their clients with adequate information so that they can make meaningful investment decisions.
That's very key. So, Ferris, as we think about next year, what are some of the companies that you mentioned that you think will be just a good place for investors to take a look at? Where are the opportunities that you're seeing?
Right. So I wouldn't rule out Proven. I mean, they bought into GMB, so you see some activity that some of that being reflected in their earnings, and JMB bought into Sagicor, so you're going to see some changes there. Boy, I won't comment too much on Barita because, you know, I work at Barita. They took a 5% stake in Proven.
That's true. That's
true.
So
I mean, there are two rights issues as well. You know, so they have some cash, and the question is, what would Barita do with the cash? So that, you know, that's something that investors would want to take into consideration. And I like NTB as well. I mean, they took over a significant stake in Guardian. So, you know, they have been producing record profits. So you never know what they're up to.
Right.
So, I mean, those are some of the stocks. I won't talk too much, you know, but those are stocks that investors can look at.
Understood. You see, you have to appreciate. We don't want to give too much of the secret sauce away. But really what we are talking about when we say at Barita, we want to build your money IQ. What we're talking about is understanding your money and how to make more of that. So first, I just want to thank you for just giving the insights people can take to make more money work for them.
Yes, thanks for having me anytime, Sean.
Yeah, man. Good.
Okay, no problem.